morning. It's just about 11 o'clock. My name is Echo Bell. Top of the morning to you. We all knew that was coming. Happy St. Patrick's Day to all of our fellow entrepreneurs today. Having just a couple of technical things here, so we're getting rocking. We'll give everybody a minute to jump on. Make sure you can hear and see. My name is Echo Bell, Bell Solutions. We are Lincoln's CFO on the go, coming to you live today for part 3 of our small business mini series. These are 30-minute live sessions to take advantage, rock entrepreneurship with all the things going on in this crazy world: pandemic, taxes, finances. Looking forward to digging in today. We're going to cover 5 key things we can do to win at small business taxes this year. How are we doing on sound, ladies?
Sounds great.
Okay. So, CFO Collaboration Live. We are just trying to get some information out to small businesses. There's a lot going on this year with the pandemic. It's been a hard year for small business, trying to stay afloat, mitigating taxes, navigating through all of the regulations and programs and things going on. And so the last couple of weeks we've talked a lot about the PPP and available programs, which we'll touch on a little bit today, but we really want to focus on, it's 2021. We are still in a pandemic and we're getting ready to enter into a post-pandemic world. And so understanding our financial health is key. Understanding our strategies in business is key this year. If you're one of the lucky ones that didn't go under this last year, it's not going to get any easier in 2021. We're going to see an upswing in things, but it's going to be another challenging year, and the pandemic isn't over. So what we're going to talk about today is 5 steps to winning at small business taxes. This is really small business financial health, which all equates to those tax savings. Okay, again, my name is Echo Bell, Bell Solutions. We are Lincoln's CFO on the go, going live today with our 3rd session in our small business mini-series. So, I have my wonderful team helping me today. So if you can't hear me or see me, actually if you can, let us know. If we have any issues, let us know below. My ladies will help. If you have any questions along the way, please post them below. They'll let me know and we'll get them answered. So, I have a note here. I posted yesterday a video about small business structures. And if you haven't had an opportunity to view that, I recommend that you do. Really taking the, oh, hi, Justin. Really taking the basics and fundamentals of small business structures and breaking them down into the information that applies to you guys. So, if you haven't watched it, I do recommend it. 1 second here, ladies. Okay. Sorry, a couple technical issues there. Okay, so first thing we're going to talk about is structure. The video that I'm referring to is about structures. If you haven't seen it, go watch it, but I want to touch quickly on business structures. This is the first of our small business tools to utilize. So if you know me at all, if you work with us at all, if you've watched any of our videos, understanding and utilizing the small business structures that are available to us as small business owners is the #1 tax strategy that we can do for our small businesses. When we first start business, we typically are a sole proprietor. There's a lot of confusion around the LLC. And so I just want to break this down, not as in-depth as that other video, but as we go through here, what we're going to talk about today, it's important to understand your structure, where you fall, so you know what to do along the way. Okay, so again, as defined, you can be an LLC, and many people get confused around the LLC. What the LLC does is it provides personal protection against your assets. And so it's not a tax structure. An LLC is what you do with the state that you're in to protect yourself, your personal assets. The thing about the LLC, though, when you start business, you are a sole proprietor by default, okay? And when you're a sole proprietor, you file a Schedule C tax return. Okay, Now you can be an LLC and be a sole proprietor. When you go get your LLC with the state, you are by default a sole proprietor. If there's more than one of you, you are by default a partnership. Okay? Both of these with the LLC provide you protection, okay, against your assets. If you're a partnership, if there's more than one of you, you're going to file a 1065 return. The key thing to understand, that first of all, I need you to understand your structure because there's so much value in the tax savings. But the other key thing to understand is you don't have to have an LLC to do business. But when you're starting, if you think about getting your LLC right away, when it's time to become an S-Corp, it's as simple as a 5-minute form that has to be submitted to the IRS. If you start without an LLC, especially if you get a federal ID number, when you get your LLC, it's going to have to go through a restructure and a whole process to get this S-Corp. Okay, so watch that video again, but the thing about the S-Corp is you pay 15.3% self-employment tax in these structures. Once you become an S-Corp, that tax goes away, and we now pay ourselves W-2 wages. This is, again, the #1 tax strategy for a growing business. The problem is you don't want to get into the S-Corp until you can cash flow it and fund it. You have to pay yourself out. Okay, so for today, just so we have them all, if you're an S-Corp, you're filing 1120S. So the thing that we want to understand today is make sure you know, going into these discussions we're going to have, are you an LLC, or excuse me, are you a sole prop, are you a partnership, or are you an S-Corp? If you're not sure, look at what you're filing, okay? Okay, so as we grow, if your accountant hasn't spoken to you about the S-Corp, maybe suggest getting a second opinion. We'll save a company tens of thousands of dollars. And the sweet spot for us is when you want to switch to that S-Corp umbrella, is when you have about $30,000 net profit. Okay, and we're going to talk a little bit about net profit here today. Okay, so again, please watch the other video, find out where you fall, and make sure you have an understanding of which tax strategy you're falling into. Okay, it's kind of an overwhelming thing that breaks it down nicely, and it's important to understand where you fall. Okay, so first step in winning. Understand your tax structures, know where you are, and let's find out how to use them as a strategy to pay less tax. Okay? Doing good, ladies? Okay, that is #1. So, strategy. We're just going to write this down here. Actually, will you post that for me, ladies? Strategy is #1. Or, excuse me, not strategy, structure. #1, business structure. Okay?
Already ahead of you.
All right, look at that. Okay, the second thing, and this is probably one of the bigger ones. A lot of people roll their eyes when we get to this one because it's not the most fun, but this is the #1 way to maximize your small business deductions. And it is also the #1 differentiator between the people that seamlessly got money for their business last year, free money for their business last year, versus those that didn't. Okay? And the #2 step is bookkeeping and documentation. Okay, my staff is already going, oh boy, this is what we talk about. If you are a CFO client, this is the secret sauce. Okay, so if you work out once a year, you're not going to be fit. If you brush your teeth once a year, your teeth are going to fall out. Okay, and if you look at your books once a year for tax season, you are always going to lose at your strategies. Okay, the fundamental requirement for CFO on the go is that it is real time, and every month we have information, and there is reason for that. Okay, so bookkeeping is #2. Okay, now this is a huge subject, so we're going to break this down a little bit and make this simple. Okay, if you are a sole proprietor watching, especially, right? We'll talk about the S-Corp a bit, but #1 thing to do. If you are a sole prop and you do not have a separate bank account for your business, write it on your piece of paper. By April 1st, you need to go have a separate bank account. Okay? Separate your finances. What happens when we do books all the time is every little penny, all those little things are being caught all the time, and you're maximizing your deductions. When we wait to do our bookkeeping, we lose track and we lose so much ground on all those little things. Now, if you're an S-Corp or a larger business, you already have a separate bank account. If you're an S Corp and don't, you need a new accountant because you are piercing your own corporate veil. You have to have separate records, okay? If you're a sole prop and you're running all your money through your bank account, go get a separate bank account. Even if you do no bookkeeping all year, if you have a separate bank account and you run everything through it, it's done. At minimum, that once a year, everything can be accounted for. Okay? The other piece to this is if you're going to grow your business, which I don't know what we're doing if we're not trying to grow the business, once you're ready for that S Corp, once we're ready to save all that tax, it's already separated. Boom. Let's just keep doing business. Right? Otherwise, we got to stop. We got to set up the LLC. We got to separate all the bank accounts. We got to figure out all the funding, all the segregation. Okay, so even though the government sees you as one and the same when you're a sole proprietor, step one now, get your books separated. Okay? If you're going to grow, if you're going to get a bookkeeper, if you're going to get an S Corp, it has to be done anyway. Second thing is get yourself a system. Okay, this can be Excel if you want, but I recommend that only short term. We are QuickBooks Pro advisors. There are lots of programs, apps, things like this. We're going to talk about what the minimum of what you need in your bookkeeping, but get a system, all right? A jar, a folder with no means or anything. It becomes messy and difficult to manage. Okay, whether it's an Excel, a QuickBooks, or some other app, separate it out and get a system to plug it all into. Okay? If you have questions, you want QuickBooks, let us know. We are the QuickBooks guru. Right now, the month of March, we're actually giving away 3 free months with CFO. I'm not trying to do a plug here, but that is a huge savings, and this system is so key. And a system like QuickBooks can not only manage bookkeeping, but we're getting into cash flow, we're getting into automation, we're getting into customer management. There's so many things that can come from a system. Okay, we have what's called a quick tune for a few $100. You can be set up, rock, and trained. Okay, so don't be scared of it. These systems are easy, and it's key to maximizing deductions. Okay. Third piece there is document. Document, document, document. If you work with this, you're like, document. I say it all the time. We just beat our clients to death with it. And I'll tell you why. Here's the thing about this year. It's always been that you needed documentation in the event of an audit. It's how we prove our deductions, right? But here's what happened in the pandemic. Got a bunch of people who lost tens of thousands of dollars in free money because they don't have the receipts to back up what they're doing, right? Here's 10,000 free dollars. You want it? Just give us your receipts. Okay? So this has always been absolutely necessary. If you're going to get audited, if you want to take those deductions, if you want to pay less tax, we write things off, but you have to have the proof of it, or they're going to come back, say it's not allowable, and you're going to pay tax on it. Okay? So document, document, document. These systems, you take photos, there's scans, there's iCloud. The world we're in today, it's so easy to take photos, keep your receipts. Okay? So this is so fundamental, but it is the heartbeat and the foundation of good accounting and maximizing your deductions. Year 2, when we started, had a client come to us, a new client, was going to owe $36,000 in taxes. We went through, pulled the statements, did this, did some work on it, ended up paying it's like $652, I think maybe $653 what he ended up paying. So $35,000 savings just by taking a little time to do this. Okay, people miss out constantly. Okay, so number 2, bookkeeping documentation. All right? Okay, number 3, yes?
We have 5 people with us now.
Okay.
And we need, if there's any questions, we'll
yes.
get them out there.
Okay, so if you want to make sure, let's do it quick. If you can hear and see us, please write in the comments what your structure is. Are you a sole prop? Are you a partnership? Are you an S Corp? Or do you not know? Let us know. We'll make sure we hit these as we go through, but want to make sure everybody can hear and see. So please let us know what you are, and we'll touch on all those goodies for you here. Okay, so number 1 was structure. Number 2 is our bookkeeping and documentation. I want to, at minimum here, I want to touch on this real quick. Talk about bookkeeping, it's kind of this overwhelming, and if you're not an accountant, it's just like, oh, right. But as a sole prop, bare minimum, what you need to do is track your income, track your expenses. Now we're going to get deep into this into the next one, and S Corp and under other ones, but We get overwhelmed with what's bookkeeping. I'm a photographer. I'm a whatever my trade is. What do you mean? Money in, money out. That's what needs to be documented. That's what needs to be in your system, and that's what needs to run through the other account at minimum. Okay? By using these systems, it's automatically going to create your full financials for you. But if you're a sole prop, you're getting started, get it separated. You need to track all your in and all your out that has to do with business. Okay? That is your basic fundamentals there. Okay? All right. Going on to number 3, deductions. Okay, this one's more of a cloud of things, but what I want to take away, we just talked about you track your expenses, and those are deductions. We get to reduce that from the amount of income that we have so we can pay less taxes. But as sole proprietors, as entrepreneurs, as new in business, we often overlook the non-monetary pieces of deductions. Okay, the key thing here is reimbursement, owner reimbursement. Okay, so make 2 columns here. I want to talk about reimbursements. Also want to talk about some CARES Act deductions. Mileage, home office, phone, things that you use personally for your business. Okay, these are all reimbursable to you. Now, if you're a Schedule C or a sole prop, you file it on your taxes different than if you're an S Corp, right? But nonetheless, we get to take this, right? So in addition to those hard costs, I had to buy these pens, I had to buy the eraser, that's all hard costs. But the time to get to the office store, the time to go to these meetings, those are mileage that's deductible, the use of my home. I took my business remote in 2018. Saved 40% off of my bottom line by going remote intentionally, well before the pandemic. Get a home deduction for the space here, the use of this. Same with my phone, my assets. Okay, so this is a highly under deducted. People forget about this and miss out on a lot of deductions. Mileage specifically, my contractors will save 20 to 30K a year in deductions on mileage. It's a huge, huge deduction. Okay, so in addition to your hard costs, owner reimbursements. Okay, want to touch quick on some some deductions related to the pandemic and things that are available to us. So everybody knows about PPP. We've talked about it. If you don't have your PPP, it is time. Watch the other videos from before, but you have till March 31st, and it's time to get going on that. There is really not too many good reasons not to do it. It's pretty hard not to get it at this point. If you have questions, please let us know. This is free money, guys, and that's the point I want to make here. Once in a lifetime deal. This will never happen probably again in our lifetime. But not only do you not have to pay income tax on this, which happens with other grants sometimes or types of money. You can get money that you don't have to pay tax on. But the unique thing about this is you get to deduct the cost. So if I got 10K in PPP, I don't have to pay income tax, but I get to write the 10K off on the business expenses I bought. Okay? Some people are like, well, isn't that double dipping? It's a pandemic benefit, and it is huge. Right? If you already got a PP, there's an opportunity to maybe get a second one. Okay? March 31st is the end date right now. Also want to make you aware, unemployment. Anybody that filed and owes because of unemployment, with the latest, we touched on this last week, but you do not have to pay tax on the first $10,200 of your unemployment. So if you filed and you owed, or you haven't filed, either wait or let's amend. In the next couple of weeks, the federal guidance is going to come out under the new Relief Act. And the first $10,200 you no longer have to pay tax on. This is huge, okay? Many people got in a pickle because of this, and it was kind of an unforeseen thing, and the government has fixed it, okay? In addition, in the year 21 and 2022, you get to deduct meals 100%. Typically, it's 50%, and it gets kind of sticky and who and where you are, but the government is trying to encourage us to go out, support our small businesses, our restaurant industry, and so you get 100% deduction on that, okay? So there's a lot more, obviously, in the world of deductions, but these are the key things with this year and where you're at now to get in track. If you don't have a mileage app, do it right now. Even if you don't do a lot of traveling, you go to the post office, you go to the bank, you go to see your account, all of those things are deductible, okay? Right, so deductions beyond hard costs and CARES Act, American Rescue Act, tax savings that are happening for small businesses now, okay? Talk to your accountant, make sure you're taking full advantage. Okay, so we have 2 left. My good ladies, any questions?
No, but I looked that QuickBooks Independent Contractor
Uh-huh.
does have a mileage.
Yes, yep, both do actually. QuickBooks Online and the QuickBooks Self-Employed, which we have packages for both, do come with your mileage apps. In addition, there's Mile IQ, there's Everlance, there's a lot of great ones out there. You can even get a log in your car. Go old school. Okay. The point is it adds up. 58.5% cents for last year, 56. I believe we're at 56 a mile for this year. Okay. All right, so number 4, this is kind of a big one that I'll try not to talk endlessly on, but I could go all day about this. So number 4, this is a financial health, but we're in a pandemic, and this is such a key strategic piece for this year. So number 4, I'm calling make profitability a priority. Okay, we have got to get intentional about profitability. I'm going to show you what we mean here. So if you haven't noticed, prices are going up. Okay, this is not a political thing. This is nobody's left, right, whatever. We are entering into a post-pandemic world, and there is no way, it is inevitable, that prices are going to go up, right? If you're in the construction world, you're already feeling it. There's various industries that are already feeling the pain, okay? The thing that we need to do this year, now and throughout the year, is get more purposeful about our profitability, okay? So if you recall before, I said you need your income, okay? And you have your expenses, okay? And so income minus expenses gives us what we call net profit, okay? This is the number that will tell you what you're going to owe. This is the key number throughout the year to keep an eye on so you know what you're going to owe in taxes or what we want to do to mitigate and get this number down. Okay? The thing I want to throw at you and challenge you to do is to understand your cost. Now, if you work with me, I've already beaten this into your head a lot. But if you're going to try to do business this year, this is absolutely necessary. Your income minus your cost gives us our gross profit. Okay? This number is the key number that you need to understand this year. And I'm going to show you a calculation of what I mean here. But your income minus your costs minus your expenses is your net profit. What we want to do is take the items that are specific to our sales. So if we are selling this pin, we have to buy the plastic, right? That's a cost. And we got to buy that little piece. It's a cost. Then we ship it to us. That's a cost. And then I pay this person to assemble it. That's a cost. And then I pay this person to make the order and ship it out. That's a cost. Those are all direct costs. And I wouldn't need any of those costs if I wasn't selling something. That is what the cost portion of your financials are. Many people lump it all in, but if you can take out the things that you directly need to sell your product or service, you will understand your cost. When you can figure out your cost and gross profit, your financials will tell you how to make more money. Okay? So when I say get purposeful, get intentful about this, here's what I mean. Typically what we do is we say, okay, it costs me, I'm going to sell something for $100. Let's say here, I'm going to sell something for $100. It cost me whatever dollars. So therefore my profit is that. All right, and that's the way that most businesses operate. We sell it, later look and say, well, what did we make? What I want to challenge you to do is make it on purpose and intentful in figuring out your costs this year. Okay, so to flip that, figure out your costs. It costs, and I have a little dummy one here. So let's say it costs $100 to make something. It's the hard costs. It's the pen, the labor, the shipping, the pieces, all that cost me $100. Okay? That's great. That gets us to here. Right? We have a bunch of expenses is what we call overhead. All of the things that aren't direct costs, you got to pay rent whether you're making sales or not. Right? You got to turn on lights, pay a phone bill whether you're making sales or not. These things keep happening. It's what we call overhead. Okay? In a company that makes $100K, spends $50K in costs, that gives you a net profit of $50K. If you're spending $20,000 in expenses, you have a bottom line of $30K. You're going to pay income tax on $30,000. Okay? What this tells us is our overhead is 20%. Out of 100,000 we made, 20,000 went to these expenses, overhead expenses. So my overhead is 20%. Okay, so I can't sell it for 100. I got to at least have the 20% counted in, right? Now what do I want to make? And this is the difference, people. Figure out the hard costs, the what you need here, and then ask yourself, what's the percentage you want to make? Okay? Now, if you're a sole prop, your money, you're pulling out of this 30K. Okay? If you're an S Corp, I'm going to put the 30K in here and you're going to owe $0 in taxes. But either way, that has to be taken into account here. What are you paying yourself if you're a sole prop? Okay, if we cover just these costs, you're just not going to get paid, right? Figure out your costs. Figure out what you want for profit and then determine your pricing. Because everything is changing. This pen to buy it is changing. The delivery fee to get it here is changing. The cost to pay the people to do it is changing, right? And you've got to turn around how you look at your pricing, make profitability an intent to figure out your pricing. Okay, this is not a new concept, but in a pandemic world, it's absolutely the approach that needs to be taken versus the old approach that we take, which is here's what it wants, here's what it costs, so therefore our profitability is this. Nope. What's it cost? I need this profitability, so therefore my pricing is this. Okay? I know that's a lot, but once you do this, and I'm just going to touch on this briefly here. Oop, I've only got a minute. This really ties to your process, your products and services, and what you're selling. Okay, and so you can really get intentful about what you're selling. All right, so that's number 4. Make profitability a priority. Figure out your numbers and then determine what you need to make to get through this pandemic year to schedule your pricing. Other people are going to be raising it. You're going to be left in the dark if you don't. Okay, we only have 2 minutes. I'm going to touch briefly on my number 5. My number 5 is invest in yourself. Invest in yourself. Everyone, oh yes, you've got to pay yourself first. I want to talk about this from a tax standpoint. We get to the end of the year. We owe money. What do people start doing? Start buying things. Spend money. Right? Well, great. I mean, are you really winning? You're going to pay less tax, but you spend all your money. Nothing left in the bank account. As we get our profitability bigger, we're going to make more money. The bottom line is going to get better. We're going to owe more tax. Okay? Get yourself into the S Corp. We're doing our bookkeeping. We're doing all these things that we said we're still making more money because we're selling business. It's time to invest in yourself now. Take that $30,000 bottom line. Get yourself a retirement plan that's either deductible to your S Corp or as an individual. Go see your financial advisors. Get a game plan for the year that ties out to your business. Okay? Because you can go buy cameras and computers and stuff like that, or you can drop $20,000 in your own retirement. Right? Now, I just threw that number out there. Each of these programs are different. You really need to work with a financial advisor on those. But saving, investing in yourself reduces tax debt when done appropriately. And as you grow and that bottom line gets up, this is the number 1 suggestion that I have, is take that extra money, invest it in yourself. As an entrepreneur, if you haven't figured out, you put yourself last. It's going to happen. It's going to keep happening. You just, right? Invest in yourself. Before you know it, you've saved something, you've got an asset built, you're reducing taxable income, and you haven't gone years in entrepreneurship without anything, right? Because it is easy to forego your income and make those sacrifices. Okay. Well, it's 11:30 on the nose. It's a lot of talking. Again, my name's Echo Bell Solutions. We are Lincoln's CFO on the go. This is part 3 of our mini-series, 5 ways to win at small business taxes, financial management, figure out your structure. Watch that other video and really understand how to use that to pay less tax. Get your bookkeeping down. Get a system. Save those receipts. It will save you so much money. So much money. It's crazy. It's crazy. Deductions. Understand, besides your hard costs, that you have other ways to reduce the use of your personal assets. Make profitability purposeful. Look at what you're selling and what you need to make so that you don't get to the end of the year broke. Because this pandemic isn't over, and it's unlikely that something else bad isn't going to happen or some kind of curveball. It's just the way it is. And lastly, invest in yourself. Take those extra taxable dollars and invest in yourself. Appreciate everybody coming in today. Again, Echo Bell Solutions, our link is CFO on the go. We got one more of these mini-series next week. So if you have any questions on QuickBooks, bookkeeping, PPP, all of these things, please reach out to us. Send us a message on Facebook. Reach out to my lovely staff. Text, email, call, Facebook message. We want to help you small business owners. You have until March 31st to take advantage of the PPP. Please don't miss out. Thank you guys. Echo Bell Solutions, link is CFO on the go.